Yeah.
Order filled, check us out.
You know what time it is.
This is Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
If you've ever held a position that you were down on, hoping that it was going to come back so you could sell it for a profit, go ahead and hit that like and subscribe button. Folks, thanks for joining us. Happy Friday. Welcome back to another webinar. I am your host, Ryan Faloona, and I am here with Andy Cole, founder of Mighty Soldiers Trades and longtime Benzinga Pro supporter. Andy, I appreciate all of the support that you give us all of the time, and I appreciate you taking time out of the trading day in order to do this webinar today. This one is going to be fun. How are you doing today?
Great. Thanks for having us, Ryan. This is amazing. I'm always happy to be here with you. And, you know, I always say that I get nervous before these things, but you make it so easy. So really appreciate that.
I really appreciate that. And I'll be honest, if you get nervous, you certainly don't show it. So good job there, man. You're doing a great job. So I just want to give a little bit of an agenda of what we're going to talk about today. I think it's a really important topic, especially for newer traders. We're going to be talking about protecting your capital at all costs. There are a number of different ways that you can do this. In my opinion, protecting your capital should be your number one goal every single day that you enter the market. Everyone would love to have that huge home run trade. Everyone would like to, become a millionaire. All of that stuff is totally natural. I totally get it. But realistically, in order to achieve those long-term goals that you have set for yourself, it's going to be very important that you don't lose the trading account that you're going to use in order to achieve those goals. The other thing that I would say real quickly as it pertains to protecting your capital, try not to get into the habit of comparing yourself to somebody else. You have no idea what their knowledge is. You have no idea what their trade plan is. You have no idea what they're dealing with emotionally or, outside of the market. And you may not have the same type of style or balance. So, I've been following traders that have been doing this for a long time that I think are much better traders than myself. They trade with size that I can't even possibly fathom. And I try not to compare myself to that because I realize that when I start doing that, I actually end up compounding my problems. I want to hit more home runs. I want to try to make more money with each trade. And when I do that, that actually goes against me. So there are a number of other things that we're going to be talking about in terms of protecting your capital. Andy, I know one of the things that you really wanted to hit on, especially, was drawdown and recovery. So tell us a little bit about that. First of all, tell us what you mean, and then tell us what it is that you do in order to protect yourself when it comes to drawdowns and recovery.
Well, pretty much the thing that most people do not understand, is if you take a 20% loss on your account because you were oversized in a position, that 20% is not just 20% to get it back. You have to get more than a 20% trade to get back to even. You actually have to get a 25% trade to get back. So the whole drawdown and recovery thing is just the fact that, I guess we can make it simpler, is if you have $100 and you lose half of it, do you have to then only get a 50% gain to get back to the $100 from 50? No, that would not be the case. You have to actually double your money to get back to that $100 point, So, and for what you said also about following people, just you don't know how honest people are. You don't know if you might misunderstand that they're paper trading or anything, So you really, as far as following other people or getting emotions tied up that you're competing with others, I did that. I had somebody that I was doing good when I first started trading, and I just started letting the ball roll out of control. It was a snowball effect just because I was trying to meet these gains that I saw other people getting that were not actually logical or even possible. And, so.
That's a really good point. That's a really good point, especially the point about it snowballing out of control. Because my first two trading accounts, I ended up blowing them up. That was part of the learning process for me. Yes, it was absolutely painful. No, I'm not some stock savant. But what I did was I stuck with it and I learned from my mistakes, and that actually helped me get to where I am today. So your point is well taken about not following people. That's exactly what I was talking about. Now, when it comes to drawdowns and recovery, you had sent me a great chart here. Let me go ahead and share my screen real quick. All right, so you had sent me this great chart. And I really like this. I'm actually going to keep this because I'll be honest, the only one on this chart that I have memorized is the example that you gave about if you lose 50% of your capital, or if you lose 50% in a trade, for example, an option trade, you then have to get 100% profit in order to get back to even. So you didn't take that trade to get out even. You took that trade to actually make money. And if you lose half of that, now the work that you have to do is compounded. Not only do you have to gain 100% just to get back to even, but if you hope to make any profit, you've got to keep doing that. So oops, sorry about that. Let me turn the squawk off here. It's my favorite tool. I have to leave it on. It's
oh yeah, absolutely.
I use
Love
it every
Charlie.
day. So in any case, this chart is actually really, really helpful because you can see that the more you lose, the harder it's going to be in order to recover that. My favorite part of this chart is when you lose 100% of your capital, it's broke. You're broke. And I mean, I laugh about that now. I probably shouldn't, but the reality is that that's true. You really don't ever want to lose your account, or especially big numbers in your account. And when we're talking about like account size, that's one thing. But the other thing here is that you could apply this exact same chart and this exact same scale to individual trades. So if you open up a new trade and it goes down 10%, is that really that big of a deal? Well, no. If you gain 11.11% back, you're back to even. That's a reasonable gain. There are some stocks that are up more than 11% in one day, and you don't necessarily have to recover in one day, depending on what your trade plan is. So as that number gets bigger, this gets harder and harder and harder. And this actually leads into one of our other rules. You want to keep your losses small. I don't know any trader in the history of trading that doesn't take losses. We all do it. If someone tells you that they don't take a loss, they're lying to you. Everyone takes losses. Nobody is perfect. The market is imperfect. So trying to keep those losses small is going to be the small battles that you're going to have all of the time. And the more that you can keep those losses small, when you actually do get gain, you can more easily offset that and stay green. So Andy, do you have any like tips or tricks for people when it comes to keeping losses small? Do you have any rules yourself about like how much you're willing to let a position go down before you actually stop out or close the particular position?
Well, there's a few things. And first, before I even go into that, is win rate. You know, I have a 92% win rate. That might sound really fancy and awesome to some people, but here's why win rates do matter. I could actually have a 1-to-1 risk reward. You know, every dollar I'm risking, I make $1, whatever. You know, if I'm trying to go for 20 cents, I could lose 20 cents on my trade. But you know, so that's the good thing about win rate. But what people don't realize is that you can go ahead and profit 92 times. One out of those 8 times, you know, could be so devastating that you take back every single gain that you made, because most people are not letting their winners run. That's one thing, you know, and basically that's just a side note here. I do believe that if you're looking to let your winners run, that the strat is a good way for that. Those guys that I see more traders living off of their trading for a living over with the strat than any other group that I've seen out there on Facebook or anywhere so far. So yeah, really quick.
No, that's a really good point. I'm glad that you brought that up, because one of the things that's consistent, and it's not even just the strat, it can be other strategies or systems, if you will. One of the things about that is that if you stick to a particular system, if you stick to your trading plan, if you stick to your rules, it's going to help you do this, because it's going to help you make sure that you don't take too big of a drawdown or too big of a loss. And again, like that's why I was asking you, is there any particular like percent? Like, do you say, well, the max loss I'm going to incur on this particular position is 10%. Let's say it's a stock position, because options can obviously move a lot quicker than that. Do you have any hard and fast like level that you're not willing to let an equity position go beneath?
So what I do is I go for 1% profit on my account every day. I don't mind if I don't meet that percentage target. It's just to keep me from swinging, you know, for like 15% or something ridiculous. Because then if I'm trying to hit huge gains, then I'm likely to take bigger losses. Like I had seen one time somebody had posted their chart of their wins and their losses, and the ones that they had, $90,000 winners, $30,000 winners, just these big, huge, giant winners. They had at least 3 losers that would erase every single one of them each and every time. So basically, I just try to keep it really simple. 1% profit on my account every day. I don't mind if I don't meet that. But what that does is that ensures that if I go just based on my win rate and I go for one, then if I'm over 1%, if you see me posting my numbers and I have over 1% loss on my account, you know that I violated my rules. You know that I've messed up that day. And that's actually happened, I think, 5 times this year, I believe, to where I've actually went over my max amount. I've had things happen to where my computer shut down, powers went out, like when you're putting your position size on, you're not taking into account all the things that can go wrong. I think people have had their brokers go out where they can't actually make their trades. I've heard a couple brokers this year.
Man, TD Ameritrade recently was doing that. You couldn't execute orders at the open. I mean, it was, that absolutely happens. And it's a really good, I really like your point about the power going out too, because there are some things that are out of your control. So
absolutely.
You want to be able to control what you can control. And we're all, there's definitely some unforeseen event that could happen that's going to make this more difficult. And setting up rules, using stops, using a particular trade plan, that's something that is going to help protect you when the unforeseen happens. And the other thing is that, at least in my experience, I would like to hear about your experience as well. In my experience, when I have a system, a trade plan, something that I'm trying to follow, that helps me control my emotions so that I don't let myself spiral out of control. The last thing that I want, this job is not easy. The way some people can explain it can make it sound easy. If you follow people that are only showing winners and not admitting to losing, it may look easy, but the reality is anything but. This job is not easy. There's absolutely no reason to make this job harder by clouding your execution with emotion, any type of emotion, fear, anger, greed, any of that. So following a trade plan is really, really helpful to that. Do you have any other tips for staying on task? I know you said, there were a couple of times this year where you realized you didn't break your rules. 2 questions. Do you have any tips for that? And number 2, do you keep any type of trade journal?
Well, we keep a trade journal. We use Edgewonk personally. And that's one of the coolest things is it actually keeps my win rate for me. So I don't even have to do that math, it tells me all that. But and as far as you can keep it simple, but you cannot have it easy. Trading is not easy, but it should be simple. Yeah. The simpler, I believe, the better. And I know a lot of people, when they do take these drawdowns and they realize how hard it is to recover, they start changing up their trade plan. They start going and okay, I'm going to use fib levels now, or I'm going to do this or that. They're always throwing in new things into the mix, thinking that's going to be the secret sauce, so to speak, to get themselves back on track. And that's not really it. What is the way to keep yourself from experiencing this is to have a thesis on every single trade and stick to that. Always assess the max risk. And how I do that is I look at how high the stock's been, how low it's been, and how low I think it can go. I figure out if I have a stock that's up over 100% of the day, I figure that I can lose all that. This thing can hit the floor in a second. I've seen it happen. I've been halted over the weekend, probably 4 days total, in news pending stock, opened up 80% down. Like I said, I've had power go out. I've had I've had so many different issues that I cannot, do anything about. So the only thing that I can do is start with the position size that seems to me that it's irrelevant. It's so small that it does not even matter, that I don't think I'm going to get anything out of that. Those are the ones that give me the most money. As soon as I put bigger size and start getting, several thousand shares in these positions, that's when I actually get less recovery or less profit, and I get more stress. And, we were talking about this earlier, that the most stressful thing is holding a stock when it's teetering on the brink of destruction, or if it's already in that mode,
Yeah, absolutely. So that brings up another really good point too, because for me, Emotion is definitely it's a battle, and it's a battle every single day. And that's what I mean about like controlling what you can control. If you're able to control your emotions, you're going to be able to make better decisions. And that's kind of why I opened up with the opener today. Hope is not really a strategy, right? So if I have a plan for something and it goes against me, it's going to be my job to realize that I was wrong and that I need to cut this. Hanging on to it just purely out of hope is not necessarily the best plan. And there's a lot of different caveats to that. A lot of it has to do with position size. One of the things that you were just talking about is as you increase your position size, you're more susceptible to emotions. Personally, I think that's totally normal. That absolutely happens to me. If I bet too big on one thing, I get nervous. I'm liable to make more mistakes, and I absolutely want to avoid as many mistakes as possible. And
Yep.
this is a job where there is no, like, I can't give you a piece of advice, and likewise someone else can't necessarily give me a piece of advice that's going to work all the time. It's a constant battle. It's a constant back and forth. So do you have any like position size tips or tricks that you use in order to keep yourself on task?
Well, I don't ever want to have more than 10% of my account in one trade ever. And the other day it would BNTX, it was like a $60, $70 stock. It was halted. It had some news with Pfizer, and it's maybe a couple weeks ago now, but anyways, BNTX, when it was halted there, I had ended up getting a position that I think it was 10 times larger than I originally wanted in that stock. And as soon as I did this, I don't even know how I did it at this point. I probably just didn't. I think I filled it in the main trade bar, and I was intending to put my size into the quick trade bar. So anyways, I ended up with 10 times the size in there and straight into a halt. The thing came out of a halt, and luckily I know how to read the time and sales, read the level 2, read the chart, know what's happening, get a feel for the price action, and I tapped out immediately. I came out with profit, but it could have went the other way. This thing could have just hit the floor. We could have found out the news was not as legit as we thought it was. Since then, though, if I would have swung this thing, it would have been crazy amazing. I think, we're way back here to the left of the chart, that somewhere around, it was just a few weeks ago, I think. So within like a month.
Yeah. Okay. So that makes sense. So the position size thing is big for me. With stock, obviously, you're going to spend more to get a position. With options, this is actually one of the reasons I first started trading options. I was aware that I was aware of the fact that obviously if you have a levered position, you can get some real nice profit out of that. However, I was also aware, thankfully, because I had been reading about this and I've been well trained. Thankfully, I also knew that options can move around very, very quickly, and you can lose everything in an options trade. In what seems like a blink of an eye. So when it came to options trading, one of the things that I realized, one of the benefits for me, was that I was able to define my risk ahead of time. And I've talked about this a lot because it's really, really important. If I'm comfortable losing $300 or $400 on a particular trade, options allow me to purchase up to that amount so that if I lose that, I'm okay. It's part of my plan, so I'm not going to have emotions take control over whatever it is that I'm doing and then cause me to compound my problem. Now, obviously, if you're going short contracts and things like that, you really want to stay on top of that. But I'm more talking just buying calls or puts and laying out defining your risk ahead of time, laying out as much money as I'm comfortable losing on that particular trade. Remember, 80% of options expire worthless. So in order to be successful with options, you really need to pick the right one, and your timing also needs to be on. With stock, when you buy options, you're giving up one of your biggest assets as an investor, and that asset is time. And so if you're unsure of a time frame on a particular trade, or if your trade plan has an indefinite time frame, maybe even a longer time frame, stock might be the way to go in that. And you might have different rules for stock and different rules for options in order to keep yourself in a safe position. Now, one of the other things that I wanted to talk about when it comes to risk versus reward, we kind of touched on the trade plan a little bit. I wanted to go into sticking to the trade plan. I actually already heard you say that once. That's great. one of the things that I definitely recommend newer people avoid is do not let any trade turn into an investment. If you want to invest in something, that's great. Investing is absolutely something everyone should do. Nobody cares about your money more than you do. So taking that initiative to want to invest and build towards the future is awesome. You should absolutely do that. However, if you're looking for something that's supposed to be a day trade or a quick trade or even a swing trade, and it doesn't work for you, turning that into a investment might not be the best idea. There might be more emotions there that you have to deal with. And so I would always caution people, when it comes to sticking to your trade plan, that's very, very serious. Make sure that you stick to that. If you're saying, you know what, I love Apple as a company, for example, they pay a dividend. I feel okay holding the stock because of the quality of the company for a long period of time. That's one thing, and you might have a different stop level, a different loss level in order to accommodate that. If you're taking a trade of a stock that you have no experience with, or you want it to be a quick trade, don't let that then turn into an investment. And one of the other things that I like to say on that note is, if a trade goes against you, and you're hoping that it comes back, your first stop is your best stop. I actually just talked about this with Sandman, who I know that you're familiar with, and he said the exact same thing. Your first stop is your best stop. There's nothing stopping you from buying back if the story changes, or if you're in a better position, either mentally or financially with your account. So don't, just because something doesn't work the first time, don't then let that turn into an investment where you then compound your problem, because at that point you're just going the wrong direction. I see here Michael is saying that I'm struggling with this. Michael, I struggled with that too, and that's the other thing, is that you want to be able to learn from your mistakes. If you take protecting your capital seriously, when you make a mistake, the lesson is going to be more impactful for you. And you're going to be able to learn more from your losses in that regard than you are from your winners. Managing a winner and managing a loser is an entirely different ballgame, even though it's still, trading effectively. It's still different. And it's important to be able to have rules defined for that and have the ability to manage that on a regular basis. Got news for you. That doesn't disappear. Emotions don't disappear. I'm fully confident in saying right now that as long as I'm a market participant, my biggest enemy, the biggest battles I'm going to fight is with myself, and the battles, the person in the mirror. I'm basically, my own emotions are going to be the biggest battle.
Yeah, basically with what you just said there, I mean, this is something that I've done in the past. I've actually had news come through, and, the squawk or something, and I quickly digest this news. I think that it's the next best thing since sliced bread, I guess you could say. And I use that because my NCO, when I was down in the Army, he said that to me one day. I'm like, I've never heard that before, but I think it's the best news ever. So this stock, it's got money in it, billions. Wow, But later on, you digested that billions is going to come out over the next 300 years, and it's going to come out $1 at a time, and it's never going to reach that amount, and they can cancel that contract at any time. Then you realize they have a bunch of debt and a bunch of other things after you've already bought into this, believe in this, and the thing is dropped, and you just turned your day trade into a swing trade. You turned your swing trade into an investment. Now you're holding the bag. 90-something% of the time of all bags that I've ever held, debt. It's never come back up. It's a loss, You're hoping for something that's not going to happen. And even when it does spike, it'll spike below your number, and you're not willing to take that because you want profit. Like me, that's me. I wanted profit. I wasn't willing to just take that, say it would have been, it would bring me up to a 3% loss on a position that I could have been down like 30%, because it's bag holding that's pretty much what we do with bag holding.
Yeah,
and that brings me to my point.
I'm sorry, go ahead.
With bags though, holding bags, always have a max loss on your bags. For me, what I say, so if I'm looking for 1% and my max risk is I'm willing to lose 1%, then my bags cannot be over 3% no matter what. And I mean, that's stupid. That's not smart for me to do that. But at least it gives me that place to say, okay, this is far too much, and I don't end up with a 20% bag, 30%, half my account. I mean, I've heard people tell me, like, I lost 80% of my account in this stock, holding it, thinking it's going to go back up. Look at TBLT, for example. They've had tons of good news. Every time this thing has good news, it's down. And I'm bringing up small caps because that's mainly our thing, but we trade the garbage in the market, and I trade options that are going to expire soon. I get scalps on moves that are like really big moves, and I trade small caps. So I trade the stuff that other people don't really want to trade. And you can actually manage your risk with the stuff that other people are afraid of as well. And that's usually by position size. I do that by position size myself.
Yeah, absolutely.
Yeah, TBLT, tough belt. Yeah, I'm the daily there. That's horrible. Look at that thing.
That's a tough looking daily, man. that is a tough looking daily.
Every single time this thing moves, they think it's going to the moon. And everybody who grabbed it at 550 before the reverse split, and then who knows? Maybe we're going to reverse split again. It could easily happen. We just got a 6-month notice, I believe, on this one. So
yeah, and that's the other thing. Be very, very careful about saying, well, the stock can't go lower. Yes, it can. Okay, it absolutely can. So again, I think that the point here is that you definitely want to stick to your trade plan. I'll give you an example that is a timely example. GoGo here. This is a stock that I've been a bull on for a long time. I was actually tipped off to this stock by someone I really, really respect. So this was not something that I found on my own or whatever. But because of the amount of research that I did, this is something that I'm actually invested in. And one of the things that I do in order to keep myself from having a trade turn into investment is I do something that I call trading around your core. So I have a core position in GoGo that's stock based. My average is 314. The point of this trade is to try and get either hit like 200 or 300% on that. So I'm looking for either like 630, 650-ish up to 9-ish, maybe even a little bit more depending on the news flow. There was a period where this thing is just beaten down, or when it spikes up and gives you gains, it gives all those gains back. And it can be very, very tempting. This type of price action can be very, very tempting to try and increase your size, break some of your rules, because maybe this thing that you've been waiting on so long is finally starting to materialize for you. And if you want to play things like that, there's a way to do that. And one of the things that I like to do is when I trade around my core, I like to use options for that as well. Now, if you're not an options trader, that doesn't mean that you have to be an options trader in order to do that. You can trade stock around that too. One of the reasons I like to do this is because I know I've already got my stock set aside. I already plan on holding this for some time. That's its own thing. If I'm going to take a shorter term trade to try and capture one of these movements, whether it be up or down, I actually use options for that because I'm able to define my risk ahead of time, and it's very, very clear if things are going to work in my favor or not work in my favor. If they don't, you cut it, you move on to the next trade. If they do, great, try and let your winners run. Letting your winners run is easier said than done. Especially if you've already been down on the position. So you can see here, there was my buy-in was 314. I've had it for longer than I've actually had this since. I've had 2 stock positions. I've had the current GoGo position I've had for quite a bit. You can see that after this runs up, it sells off. And if you're below your cost basis, that your temptation might be to add to a loser, which is something I try very hard not to do. With an investment, I'm a little bit more lenient on that because my outlook is a longer time frame anyway. But even so, before going into that, you need to have a plan in case this doesn't work, because not everything is going to work. Now, you can see that this thing recently, the past couple of days, this thing has really had kind of a nice run. Now, I'm still holding all of the stock. The calls that I had, I was able to sell. The calls that I had, I actually bought and was down like 70% on. And I managed to get out with a gain. And the thing is when you see that red position turn green, you're a little bit more quick on the trigger, if you will, because you were looking at a position that was showing you an unrealized loss. Now that unrealized loss has been erased and you're in gain, and you're more tempted, oh, I just want to get my money back, or I want to accept less profits. And when you do that, if you're trading around your core, you're actually not going to compromise your initial thesis. And that is exactly what happened to me in this particular trade. Full disclosure, long from 314 and looking for 6+ on the actual stock here. If things went well, if the news flow went well, I would actually try to hold out for more than that. In the meantime, I would try and trade around my core position. I got a question here from Zachary. It says, explain your time horizon on the go-go option. So I'd be happy to do that here before I turn this over to you, Andy, again. My time horizon on go-go is the long-term play. That's already covered in my stock. So I don't need to worry about that. I don't need to buy leaps. I don't need to look very far out. But because I don't know when certain events are going to happen, I don't have a feeling if the next earning is going to be good, or is going to be a good earnings report. I don't know what's going on inside the company outside of the press releases that I read. There's a lot of unknowns there. So if I'm going to try to play something for the short term, let's say I want to see a gain in a month. Maybe buy options that are 2 months out. In case that doesn't work, give yourself some more time. If it does work, the premium is going to be in your favor anyway, because those options are not going to be expiring next week. So my time horizon for options is going to be much shorter than holding the stock. I actually only trade the monthly options. I will rarely trade a quarterly option. That would actually need to be something like Apple, something that's much bigger and much more liquid. That's when I would entertain trading quarterlies. But I really want to stay where the volume is, because again, if the trade goes against me, I want to be able to get out. And in options, if there's no bid, good luck getting out. So again, it has to all be part of your trade plan. Go-Go was a really timely example because, like I said, these past few days here, it's really been great. Andy, one of the other things that you had mentioned to me is you said something that I thought was really interesting. You said you wanted to trade like a bank. So tell me about that. Tell me about what you mean by trading like a bank and how one can go about doing that.
Well, everybody says, trading, you got to treat it like a business, which you do. And then when they say that, they say trade like a casino, which means that, you want to make $3 for every $1 you're risking, or you want to make $5 for every $1 you're risking. And again, that's smart. So if you're trying to get 25 cents and you're only risking 5 cents on your trade, that's, obviously that's going to work out for you. Your win rate doesn't have to be that high. But I say even more so than that, trade like a bank. And what I mean by that is my grandpa, when I was really young, he told me, Andy, if you can make a buck, make a buck. And a lot of people turn up their nose at $20 or a buck or $100 or whatever it may be. Like I hear a lot of traders, they're like, oh, that's not worth my time. That's not 10 grand or whatever they're looking for. And I just think that's absolutely foolish, because the times that I'm making a buck, that's adding up into a lot of money. And the times that I'm going for, the huge, let's say in this case, 10K play, I'm risking more to get this. So then I'm going to get knocked down probably and lose more of that. And over time, even though I got that really good good play out of it, I actually gave back most of that money, all that money, sometimes even back in the red from something like that. The strategy just doesn't work for me. So, a bank, what they do is they'll go 1 million times in a day making $1. They just made $1 million. But you got this other guy over here. He's like, no, I want to swing for the fences. I need to put all my account in here, and I need to hold it all the way up here, and that's going to change my life. It's like, no, it won't, because you'll hit that, and then you're going to do it again. Then you're going to do it again. Like, a lot of these guys, they do get lucky. They do end up hitting something like that. I hear all the time in Discord and stuff, I hear guys really just getting like, wow, you got really lucky on that. They don't take the money and then put it into a smart strategy. They still keep going for that stupid, foolish strategy. And it's like, you had it made. If you just would have taken and put it on autopilot a bit.
Yeah, no, I know exactly what you mean. And it's a really good point too, because banks, they don't care. They don't care how much money you have. A bank will take you as a customer if you have a checking account with, $500 in it, and they'll take you as a customer if you have a checking account with $1 million in it. They don't care about that. They want to be able to, to make money off of everybody. And after all, they're in business to make money. So I don't mean to, cast a negative light on banks or anything like that. But I think that point is well taken. Now, I did have a question here from Ethan that said, what is your best advice for letting your winners run? Like you said, it's really hard. Okay, Ethan, this is a great question. And if I had an answer that was a one size-fits-all answer that I could give to everyone, I would. But it's not that easy. When it comes to letting your winners run, a lot of it has to do with your trade plan. A lot of it has to do with what are you looking to get? What is your time horizon on a particular trade? How in control are you of your emotions? What are some of the outside factors that are going on? So when it comes to letting, some of the things that you can do to help letting your winners run would be trailing stops. So if a stock is moving in your direction, if it's moving in your favor, maybe put on a trailing stop. If the stock continues to move up, maybe move your trailing stop up so that you can keep exposure to the upside gains, but make sure that you don't give it all back. That's one of the things Andy was just talking about here. You know, you have a trade where all of a sudden it goes against you and now you're in the red. You definitely don't want to do that. You know, if you're in profit, make sure you get out with some of that profit. And if it's an investment and your time horizon is the most important thing, you want to hold it for several years, then maybe you're not as worried about some of the daily fluctuations. But if it's a trade and you're trying to get in and get out, you want to stick to what it is that you're sticking to. We ask Sandman about this all the time. He gave an example. He was several weeks ago, months ago, maybe at this point. Here, let me pull up the chart. He was trading VXRT, and the reason that he was trading VXRT is because it came up on a scanner, and there are a lot of people that trade for that very reason. So. And in this day here, where it goes from like the mid threes all the way up to 630, this is the actual day that took place. Now, I can't remember exactly what his buy-in was, but basically he ended up scalping the stock for 20 cents. And when you look the next day and you see the stock is up hundreds of percent, multiple hundreds of percent, that might be a tough pill to swallow. And I've asked him about that. I've said, how do you deal with that? Because that's a question that I get all of the time. I've been successful in some cases dealing with that issue and unsuccessful in other cases dealing with that issue. And he says, well, you know how I deal with that? I just remind myself that the market is open tomorrow. I have a system that I rely on. I have a system that's consistent. I have a system that's kept me profitable for decades. So I'm not going to cry over a missed trade. Andy, we're going to cover that a little bit later as well. I really love that saying that you had mentioned. We're not going to cry over a missed trade. The market is going to be open again. There's going to be more opportunities for you. Did you get out with a profit? Did you follow your plan? If the answer to those is yes, then be happy because you came up with a plan, you executed your plan, and it worked in your favor. That's great. If you can compile that, or if you can continue to build upon that, you're going to end up being profitable at the end. And if you're able to do that without also comparing yourself to somebody else that may trade in larger size or trades things that are more risky or trades entirely different from you, if you're not comparing yourself to that, you're going to end up being more successful in the future. So, the whole trade like a bank thing, absolutely love that, Andy. Do you have anything else to add? I might have just kind of ran you over there. Do you have anything else to add to that?
Well, one thing with as far as, let's say that you have a stock that spiked up, it came on the scanner, like you just said, and we hit a high and we pull back, and let's just even use the upper end of this one right here. There's a consolidation point, you know,
right here?
Right there.
Yep.
So when we pull back on that red candle right there, just above the former low of that green body on the other, just left a couple, that red lower shadow. But anyways, if we grab right there, what I would say to do is maybe take off half the position at a reasonable upper resistance for like a bull pennant, which is not going to be at the high. It's going to be a little bit lower, you know, on an angle there. And then all you have to do is put a stop back at 0. And if you do that, you're going to take half your profit, no problem. You're not going to lose any money because you got your stop back at 0. And if this thing decides to run up, you're good. In this case, it would have stopped you out. You would have got half your profit within that consolidation. Very predictable. I love predictable areas of consolidation. They're some of the easiest places to trade. They're very, I mean, day after day, just nice, kind of easy profit. I mean, well, there's that easy word. But.
And so, Andy, doesn't that kind of go along with trading your plan, right? So if you are anticipating something and it actually goes according to your plan, doesn't that help you successfully execute your trades?
Well, yeah, I mean, absolutely. It goes along with the whole thing of this is my thesis. This is the lower end. This is the lower line. We need to establish a line. You have to draw a line. I mean, maybe cliche, but you have to draw a line. And you know, your lines need to be an upper line and a lower line. And if you go below that lower line, you broke your thesis. You know, you're no longer within your trade plan. You're allowing this thing just to go wherever, and you're hoping that, okay, maybe we'll find another level of support. As this thing dropped down right there, how many people are sitting there saying, okay, we're probably going to round back out and make new highs because the news said this. Well, it didn't, you know. And usually when it,
I was just going to say, Andy, I was just going to throw this in there because you just hit it right on the head. The news about this stock was COVID related, vaccine related, all of these things that are present in the news cycle. So it's kind of lending itself to that hopium strategy, as I like to call it. Hope is not a strategy. Stick to your plan. Stick to the things that are part of a strategy. So I'm sorry, I didn't mean to run you over there.
Well, another thing is when you get down that slope, I guess you call it, you know, and you finally get that one big green candle with that huge upper shadow there, that probably stopped right where some folks were averaging. You know, it's penny stocks, first of all, they don't carry dead weight, you know, and they're not trying to just give you money. But it just so it may not be that anybody even has a plan to like defeat you and not put you into profit. It just, that's the way it works out. You buy there, you average here, and the speed of the stock, that's just the way it trades. And anyways, you know, as you see it continued down from there, and everybody who was hoping and thinking that, you know, this is going to go to the moon based on this COVID play, they're now, you know, they're not very happy.
Yeah,
this is one of those accounts where you're down quite a bit.
Yeah, absolutely. That's exactly it. And, you know, and like, let's set up a hypothetical trade here. All right. So let's say that you're watching this downdraft. All right. And you've kind of set levels based on, you look to the left and you've kind of set some price levels based on former candles. Let's do it here as an example. All right. So I see the top of this candle here also kind of coincides with the bottom of this green candle here. Maybe that's an important level. Now that we look over here, you can see the stock really kind of based around this level. But again, look what happened. Eventually it broke down. All right, it broke down past this particular price level, and now it looks like we're testing. Let me get that again here. Horizontal line. Now it looks like we're testing right around here. And it actually, it looks like it broke that and is trying to regain that, but we're not really sure where this is going to go from here. So you want to be able to find, I know, Andy, you've talked about chart formations quite a bit in some of the previous webinars. I'm sure that you use chart formations on a regular basis for some of your day trades or your shorter term trades. That's part of sticking to your trade plan. Stick to those. If you've identified a point where, you know what, if this stock breaks down past this point, the trade is really not working in my favor. Stick to that. Don't think, well, you know, COVID's in the headline. We may be able to actually turn this around because what happens if we start getting more positive tests or more hospitalizations? Or maybe there's a news article that says, boy, Vaxart is really coming along with their therapeutic or their vaccine or whatever it is. There's no, if you stick to your plan, there's no reason you can't then buy that back in the future if things turn around. But don't break your rules just because you have hope, just because you have a gut feeling. And if you were in this for a particular trade, do not let that turn into investment. I hate to harp back on that. I did have a really quick question here I wanted to get out of the way. What are you using, Ryan, that you can have buy and sell option on your chart? Keith, that's a great question. One of the things Benzinga is looking to do is add what we call trade integration to the platform so that you can actually trade right from your platform instead of having to switch over to your broker. And we're testing this internally. So internal employees here actually have these buy or sell buttons. You can see these are a list of the brokerages that we have access to. We are absolutely working on getting more. You may not see your brokerage in there. That's okay. We are definitely trying to expand this feature, but this feature is not polished yet. It's actually not ready for prime time, if you will. So we're still doing some testing internally. That's why you see it on mine and don't see it on yours. When this is ready, there will be a release and you will have that option to add if you so choose. So great question. Nice, astute observer. I had another quick question here about GoGo. Selling puts on GoGo or other upward movers on upward bell graphs, only if you want to own the stock at a discount or hold for a set profit margin. Okay, so the second part of that looked like a question I don't necessarily understand. But one of the things that you mentioned here is selling puts. Well, first of all, my trade plan does not include selling puts. I would not sell puts. If I was going to sell puts, why wouldn't you just buy calls? Number one. But you really did hit on something else there where that's kind of what I mean about trading around your core. So if you hold a stock and you're waiting for this to actually go up, and you recognize something else in the chart, or you recognize another formation that tells you that this is going to go down, you can still play that move while still holding your stock, and you can do that quite effectively with options. If selling puts is something that you're interested in, by all means, go ahead. That's never actually fit into my trading plan, so I just don't use it. That doesn't mean that it's right or wrong. There are plenty of people that make money selling puts. It's just not for me. I try to give myself as many advantages as possible. I don't try to do things that are out of my skill level. And that's another kind of dovetails with the theme of what we're talking about today with protecting your capital. You don't want to step outside of your comfort zone. You want to make sure that you have a keen understanding of what's going on so that you can react to it if your situation changes.
Well, Ryan, there's a couple of knives that are actually a lot sharper in the drawer than others. And one can be going short and one can be selling options. So, you know, if you're selling options and you don't know what you're doing and you're not prepared to, it's just don't do it. Make sure you know what you're doing. Do your own due diligence. Learn quite a bit before you start messing around with that,
absolutely.
You know?
And real quickly, Andy, that is where paper trading really, really shines. Paper trading has its negatives and it has its positives. And one of the positives is when you move from something like stock to a different trading instrument like options, or even if you move to futures at some point in the future, no pun intended, you can actually practice that ahead of time, right? You can say, okay, well, I've never really traded this before. I want to have an understanding. You can use your paper account to kind of understand how these different instruments actually work before you're ready for prime time. That's exactly what I did with options. I got to a point where I was comfortable trading calls and puts, so that's what I've done. I've tried to execute an iron condor in my paper trading account. It didn't really work for me. I'm thankful that I did that in paper instead of in real time, because I really would have taken a beating there. So it's a really good point. Absolutely know the software that you're working with. Know what you're trading, both stock wise and instrument wise. So definitely, I think those are really good points. Now let me just consult my list here. We had a couple of other things that we wanted to talk about.
Real quick, I'd like to say, if you're having a problem with knowing your max risk and keeping to your trade plan, your thesis, and not breaking that, you might want to switch over maybe you're 100% discretionary and systematize your trading. If I'm saying that right, systematize, yeah. But more systematic approach is what I'm saying. Anyways, you might want to actually make it to where it has to happen. Like this like a computer. Trade more like a computer in this case. So trade like a bank and a computer. Well, just a lot of people they say I hear so many people saying, if you're not stressed, then you probably don't have enough size in that play. Well, there's guys that will paper trade for 3 years practicing this. They study everything. They become trading engineers, trading geniuses. And then when they go out trading, they're swinging for the fences, tens of thousands of shares, whatever it is they're putting in there. And it's like the guy that paper traded for 3 years won't go with 20 shares. He won't go with 100 shares. He won't go with maybe one share in some cases. If you're buying Amazon, you might even want to go with one share. Just give it a try, give it a whirl. I don't understand that at all. I've seen so many people willing to put in all that time paper trading, but not willing to go even one go with a couple shares.
Yeah, and that's a really good point, because that's actually one of the downsides of paper trading, is that when real money is on the line, it's different. Just because you can do something in a paper environment does not mean you can do that in a real time, in a prime time environment. And it's important to understand that. So when you're actually practicing a strategy and then you move that strategy to real time, maybe reducing your position size is a good way to start that. Maybe not swinging for the fences is going to help you do that. It's absolutely helped me before. Whenever I'm and paper trading aside, whenever I'm on a losing streak, one of the first things that I do is I reduce my size. And I actually got that from other expert traders. I said, what do you do when it feels like everything that you're doing is wrong? How do you fight that? And the answer is always, always, always reduce your size. Because simply by reducing your size, even if your negative trend continues, you're protecting your capital, because you're not risking as much, especially if your mental state is not correct, if you're becoming emotional about trades, if you're exiting too early, if you're stopping out too early, if you're not letting your thesis play out. I mean, there are a number of different things that can actually go against you. So definitely when you're when you want to protect your capital, reducing your size is going to be a very, very easy way to do that. And you can, like you were saying, Andy, about it being systematic. When you reduce your size, you can start getting back to your system. You can start getting back to what's worked for you in the past. And the smaller your size, the easier your emotions are going to be to manage. You can actually remove that variable entirely. Now, Andy, we've only got 10 minutes left here, so I want to bump something to the top of the list just to make sure that we cover it before we run out of time. You had talked about don't cry over missed trades. Everyone's probably heard the saying, don't cry over spilled milk. Okay, great. But explain to me what it is that you mean about don't cry over missed trades. What does that mean to you?
Two things that I definitely do not believe in. I do not believe in recouping losses. I don't believe in trading to get my money back, ever. I think that's the most foolish thing you can do. That puts negative emotions in your trades. I believe in just trading better each and every time. Just come back to the table, trade the chart, not your feelings, not the money you lost. That's all gone. We're here. We're in a new trade. Let's do this. And then, you know, as you just said, just if I get into a trade and I say I don't take off half the position, I traded my thesis, I took my profit at my profit target, and the thing keeps on ripping to the moon. You know, I don't care what I've missed. It does not matter. I traded my plan, and then if I need to, I'll get back in there and I'll trade it again. I'll come up with a new trade plan and I'll trade it again. But I'm not worried about. I did my trade. I executed that trade perfectly or really great. I'm not going to cry that I didn't, you know, get those additional gains on top of that.
Absolutely. And just to add to that, first of all, you hit it right on the head. You said you can always buy back in, and that's absolutely right. And then you took that even further by saying that come up with a new trade plan. Exactly right. The other thing is when you're actually trying to trade your plan, there are a number of things that you might be able to foresee, and there are a number of things that you might not be able to foresee. And it's important that you're able to assess that with a clear head. If you feel like you're missing something, and you're like, oh man, that was it. That setup was perfect. I was watching that. The news was good. I missed it. It's okay. The market is open tomorrow. All right. There's going to be another play at some point in the future where you might be able to execute a very, very similar plan, maybe even the same plan. So there's no sense in getting bent out of shape about that, because like you said, now you're actually bringing in negative emotion into something that you were initially trying to remove the emotion from. So there's a lot of good stuff there. When I first started, oh man, there were some trades where I missed them, and I was like, I'm never going to see that again. And sure enough, I did in the future. So just don't worry about that.
I always say this, you know, guys in my stream probably like, man, he's saying it again. But I say it's like catching a football. If you put your hands out, you know, and you just leave them there, you're going to snap your fingers off. You're going to break your fingers. And I've seen people do it. But what you do is you bring it into your body, you absorb it, you curl your body with it. And, you know, that's what you want to do when you're buying a stock, especially these morning rippers or pre-runners or whatever. That's, you know, buying at the top, you're going to snap your fingers off. You have to let it come to you. And if I miss it, if it's coming back down and I'm just a little greedy on that entry, I need to be. That way, when I do get filled, I'm going to get put immediately into profit. I'm going to be happy about that situation. But if I'm saying, okay, I got to get filled, so I'm going to lift up my bid, you know, go just a little bit higher on that, you know, it's more likely I'm not going to do so good. And even if I do profit out of that, it's not going to be as much, and it's going to be more stressful. It's maybe going to be a slower trade. I'm going to get wore out by that. I don't want to get wore out. I would much rather have a greedier entry on that. And, you know, then it just takes me into profit. I'm like, okay, guys, I just hit that. That's awesome. And on to the next one, next one.
You know, that actually brings in something else here that I want to talk about, and that's chasing. Because chasing can really, really be the siren song for traders. Oh, yeah. You see something, maybe you had an inclination that this was actually going to run. Maybe you had a particular thesis that you thought was going to play out. You either didn't get in because the entry wasn't quite right. Maybe you were busy a particular day. Whatever the case is, that varies quite a bit. Don't chase, because when you chase, you're going to do several things. Number one, you're already stepping away from your trade plan. So if your trade plan was buy the stock XYZ when it comes down to $4, and it comes down to $4.06 and then reverses. And then before you know it, you're like, oh, my thesis is playing out. My thesis is playing out. I got to get in. I got to get in. And you end up buying at $4.90, and that happens to be the top. Then you actually do exactly what you were talking about, Andy. You snap your fingers off because you watched it. It almost came to your plan. It didn't quite do it. And then as it started to materialize, as the up move started to materialize, you thought, I don't want to miss this. I don't want to miss this. I got to get in. I'm going to chase it. And that can hurt, all right? That can really, really hurt. And that can be amplified if you're trading low float stocks. And you know, if a stock has a low float and it's being talked about on Twitter and it's quite volatile in the actual market, that might, if you have a particular plan that you feel you can execute, that's one thing. But if you don't, or you feel the desire to chase, or you feel your emotions coming to the forefront, maybe that play isn't for you. There's nothing wrong with saying, you know what, I'm not going to do this. I'm going to wait for something better that more fits my thesis or my criteria, and I'm going to play that instead. There's absolutely nothing wrong with that. You only need to get rich once. You only need to get rich once. Don't blow it trying to hit a home run early on.
Yeah, just never get yourself into something where you're freaking out, where you're stressed out, and don't worry if you miss something. That's a good thing, and don't worry if you cut your losses quickly and you take that loss. Even if it's all your capital for the day and you can't trade again today, no problem. Just move on. It's going to be so much better and easier. These are the things that you grow when you grow as a trader. You become really excited and happy about. But as a new trader or newer trader, you know, I have to make this a certain amount. I have to be a millionaire within 3 months, and I have to, you know, there's all these have tos. There's this. I've seen so many people show me their trade plan and their percentages and what they're going to get at each time and all that. And you know, that's great. I love the enthusiasm and that you're excited about all this. But that's not really what you should be focusing on. Just people don't want to break even either. They want to profit. Yeah. They have to meet a certain. Focus on breaking even before you can focus on profiting. Just be a flat trader, because most people, it takes how long to become just flat, you know, to break that equilibrium point. I was just talking to my friend about that the other day.
You know, but I would say for me personally, it probably took me a good year and a half of trading all of the time before I was actually able to get consistent. And I'll be honest, that kind of sounds like a long time. And I've seen other people that has, you know, been able to do it in several weeks or however many months or whatever the case is. For me, it was different. And that I knew myself. I knew that if I worked at this hard enough, it was eventually going to work for me. And I'm not some guru millionaire trader by any stretch of the imagination. I am just like all of you, trying to make, you know, get by doing this. And I supplement it with another job. And then I'll be honest with you, that's one of the other tips that I have. That really helps me. That helps me control my emotions. Knowing that I've got other responsibilities, whether it be family or work or whatever the case is, that actually helps me control my emotions. And when it comes to the job aspect, there's a financial aspect to that too. I know that I'm going to be able to get a source of income from somewhere else. So I'm more easily able to remove my emotions from future trading. That has benefited me quite a bit. Now, you know, will that change in the future? Maybe, but that doesn't need to change right now. I'm doing things right now that are able to make me successful. And what's successful for me might not be successful for you. It's important to be tapped into yourself and do what works for yourself instead of, that's kind of why I was saying earlier, don't really compare yourself to other traders. Just try to be a better version of yourself every single day. I would imagine you agree with that, Andy.
Absolutely. And I'd like to say, first of all, thank you for your service, Jason. I really appreciate that.
Likewise.
And, everybody here, thanks for your time. You guys are awesome.
Yeah, I really appreciate it. Andy, thank you very much for joining us today. This is always fun. I love having you on. I love having people on that are about education and trying to teach, because there are a lot of really bad habits that you can develop if you're trading. There are a lot of pitfalls in trading, and it's important to be able to kind of recognize those earlier on. The quicker you can cut the fat, so to speak, or stop quickly on a trade that doesn't work, whatever analogy that you want to use, the quicker you can get control of that, the better off you're going to be going forward. And consistency lends itself to that. So when it comes to protecting your capital, make sure that you can trade the next day. Make sure that you don't lose too big, especially on a single trade. That's an absolute killer. And, make sure that you can learn from your mistakes, because inevitably that's how you're going to get better. So thanks again, viewers. Andy, thanks very much for joining us. I hope you all have a great weekend. I hope you all stay green. And remember, until next time, happy trading.
Yeah.
Ordered Phil, check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like,
If you with the squad, then you already know what's up. It be going down, but my account is going up. I'm about to make another 100,000 bucks. Rolling up that chain, I'm about to take another puff.
Hold up, I made a killing, now my pockets got swole up. Independent, now I'm taking over. I'm a lot richer, you a lot broker. I'm a pot smoker, stockbroker, blowing up like a supernova. On my mama, I was born a soldier, the best in the game, man, I thought I told you. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, I am unstoppable, I can do anything I ever wanted to. Never did anything they ever wanted me to. Got on my side and I'm not gonna lose and they're not gonna win. I see them, the haters, it's all cause I'm getting dollars again. Commas on commas on commas, I'm buying the dip. The market is dropping again. I can see him hating from the sidelines. If you see a hater, tell him bye-bye. Watch my money grow, 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 grow. And my wifey like, whoa, 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 whoa. Somebody better stop me cause there ain't no competition and I'm coming for the top position. Obliterating the opposition every time that I jot it in the composition. Everybody wanna stop and listen cause I bring it to you hotter than the oven in your mama kitchen. I be getting hit like a politician. I'ma get bread when you stack looking taller than Scottie Pippen. Ain't nobody ready for the Armageddon when I pop the clip and I ain't playing. I'm spraying you brain, I'm bringing the pain like Damon Wayne. You disappear like David Blaine. I'm dropping bombs, Saddam Hussein. Stop and aim, pop you lames and pop champagne. I ain't playing so stop the games, you know the name. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it.